Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Wednesday, September the 25th, 2024. It was another nice range in the day, but very difficult to trade because it didn't do it in nice, clean moves. They were very up, down, jerking and going sideways and doing lots of different things in between. What it did for the count is basically nothing. Although we did go again here in the S&P and also in the NASDAQ and produce in the S&P a new all-time high. And that was back up at 57.97 or almost 98. No, actually it was 57.98.75. So very close, gave a little look at the 5,800 level and then backed off. But the charts don't signify, to me, they're not necessarily putting in a clean top that I would feel more comfortable with putting 5 and then a C and then a B above it to produce a stronger decline to start from that high. And so I'm leaving it open right now. And I do believe that the market still, just basically, even if you felt how it closed today, was after the regular session bell rang, that suddenly this thrive of sellers, this whole bunch of, not sellers, buyers, buyers came walking in, particularly in the NASDAQ, and took it up back to the highs. So on the S&P, I still think that we're counting it up as both. Either it's going to be, I'll quickly just go to the 4 hour so I can do a quick review. It's going to be an A, and we're working on a B wave, and there would be just a little bit more to go, and I'll go over that in a moment, but still the outcome would be that we're going to get a stronger C wave back down, likely ending up definitely below 5170, 5258. That would be that low right there, 5258. Looking for it to go 5177, looking for it to go below to finish and then rally again. Or we're finishing up. And if this is the -4 down here, it's still the same count, folks, that are running together. This would be -4, and this is 1, 2, and we're inside the 3, and just finishing. So that would be a minute wave 3. So it is subdividing. So we're just finishing up under this particular view. We would just be finishing up minuet wave 1. So the choice, we're close to where we're going to pull back in some form. And either it's going to be that little bit a minuet second wave, or it's going to be a minute C wave. Now, the minute C wave is going to be greater, stronger, and the whole shebang. And the wave 2 is still going to feel strong in the start, but then it will have limitations in how deep it can go. All right, so back down to that hourly chart. So today we got up there, but we're pulled off, and then we had a strong close, I feel. That does not necessarily always mean, as it used to, I would look for the way that the market finished up was usually the way that the market would begin the next day. But that's before we became totally global. And so now things just kind of get moved around the globe. So, but I would say that we likely will continue to move higher the way that I felt. We closed the options here in the US. And the way that I think, the other thing I want to kind of bring into this discussion is that, if we're following the flows, you have to think about what's going to affect the spiders, the S&P, the ES is the futures market, and the SPX, and all of the underlying. And so it is actually the options flows. And when we see them moving heavily from one into another, and they're doing it via options and stock, it is going to push it all. And now going down to the ETFs, particularly like the Qs and the spiders, the way that the levels are showing up, that I think a cascade or a big tone change can be first realized in the spiders and the Qs. And it's because of where their levels in terms of a volatility trigger comes in, and that being the most important to me at the moment. And then down below in the NASDAQ, it's been building where the call wall is below the market. So obviously long calls and they're happy. So if it's below the market and it breaks, it's because they're long. And so if it breaks down, then they're going to have to get out and they're going to have to sell. So anyway, we got that to contend with. Now, here in the S&P, I'm leaving open the option. I'm not leaving it open. I'm leaving it open that I believe that the market is at least going to test. And they have until Monday, right? Because that's when it gets moved. But it always seems that the market has some intent as we get close to it to go up and give it a look. And maybe even go through it. And trust me when I tell you, it's like I don't think that JP Morgan's going to get too excited one way or the other if they do, and if they go up through it with a couple of days left. And believe me, there's enough other things that they could do that they'll ride it out and then they'll make their switch and everything will be fine. In any case, I believe that the market can go up to that level. Now we already have resistance at 5802, 5803. And that would go with this sub-minuet wave 5. That would be here. 5807 remains the highest. There's a large gamma at 5807. And also the call wall, I believe. Let me just double check that if you don't mind. So today in the SP, in the 5750, 58, yeah, it is the call wall and the largest gamma position. So it's different in the NASDAQ. But here, 5807 is the call wall. And it's the call wall because of that. The largest position sitting there is JP Morgan's collar, which is going to get rolled on Monday. So how much, and the options that they're in expire on Monday. So how much they want to really go up and try to tease it and test it and do whatever they want could all happen. And it could happen for other reasons and they're testing JP Morgan. But I'm expecting some volatility right going into Monday and likely on Monday. And it could be a topping process, or it could be a topping process finishing, and then we're starting to move lower. Because it also, this lead up to this expiration, this quarterly expiration, a lot of things start to get released after that in terms of gamma, in terms of delta, in terms of volatility. So a lot of it will get released at that time, and we'll be coming back in on Tuesday to, we'll see what it's going to be, whether it's going to be risk on or risk off. Because there'll be a lot of it, the adjustments will be made as things come off on Friday. Excuse me, on Monday. So our levels right now, there is fib resistance at 5803. And I'm going to say that goes up to 5807. And then we have additional, and that would come via the sub-minuet wave 5. Within that sub-minuet wave 5, it would come for the fifth wave, its fifth wave, at 5822. And so, yes, I would imagine they could easily push it, because as we get up here, it should get pretty thin, right? It's new high territory. Where are you going to put it yourself? So it's like, you know, it's just there. So we have that resistance level of 5822. And then next up that for the sub minuet would be 5845 to 5850. So all of this is one big accumulation of resistance levels that could finish this fifth wave and then the C wave, or wave 1, minuet wave 1. So yep, that's what I'm looking for. And it's, again, we'll see after, but if it's just a minuet wave 1 and I'm looking for minuet wave 2, then we're likely just going to not come back all that far. But we'll do it in an ABC down. And we'll be correcting inside whatever we just did off of the September 6th low is what we'll correct coming back down. believe. Yeah. Now, I want to go up to the daily, want to look at those moving. I don't think they've changed at all, and they haven't. In fact, you keep looking on like, is there anything different? Yep, there's a red bar. So we'll see exactly what kind of happens, because these are all still very favorable. Now, again, as far as the market goes, yep, it's building towards to get to Monday for the roll. It's also building for Friday, and that's got to be interpreted because we have PCE, and that's the big one for Friday. Plus, we have every Fed governor, president out speaking tomorrow, including Jerome Powell. So the market will be listening, let's say. So we might get some volatility out of that. Over in the NASDAQ, there's nothing else I can really say other than that. So I'm looking, we still got to get up to those highs and then decide. Moving averages, because on the daily already, I'm just going to take a look. They are actually pretty good, except you see the 50 and the 200, they'd rather be flat rather than turning higher. And that's as we, for the sequence, make a new high for the sequence. No, actually, it's not. It's for the B wave sequence. The total sequence would be that we break the high at 21,219 or 220. And that high is 21,213. So once we get above that, then we're in new high. But for the sequence, it could be the C wave. If not, then this is going to be 1, 2, and this is going to be minuet 1 of 3. So this is going to be minute wave 1, minute wave 2. This is under the other one, the minor 5. Minute wave 1, minute wave 2, and we're in minute wave 3, of which we're just finishing minuet wave 1. So we got a 2 and then a big 3 and a 4 and a 5. So under that minor 5, yes, it would say that we're going much higher before it is done. So 23,000 is possible under that count. You have to also fit in. Does it take much to get a market to really go up 1,000 points or so from where it is? It's like, I think so. But it has to be in unison. So all the markets, we're all kind of doing this for the same purpose. So there has to be an underlying stimulant that's going to continue to say that this is the correct thing to do. And I don't think that we'll know that until after the election in November. So we're entering into a period where the volatility could get crazy. Now, as far as the VIX is concerned, yes, there is the potential that the market slips and goes back to a level, but I don't think that it's actually just going to overnight, like we saw, go from whatever it was up to 64 and then just drop all the way back down. But I can tell already that just with the current contract, the cash is actually in volatility. The cash is back lower. And always, let me just take that, put it over here, so I always can reference it. The VIX is actually down back below 16. It's at 1541, while the futures market is at 1823, of course, because you have interest, so you have time. So there's a time value added. And so this is an October contract. But yes, they could, but it's not necessarily foreseen. And I don't think, unless something really stupid happens around the election or just after or just before, I think that there's many things that the market will tolerate, won't tolerate. I don't think, and I'm not ready, and I wouldn't be listening to any discussion on whose administration is going to be better. Because it's not up to us, it's up to the individuals that are going to go out and vote and see what happens. But I think that as far as the market is concerned, it will be defined by, is it a risk on or risk off? And because that's going to pull a whole lot more into trade if it goes into that. Right now, I believe we are still in a more positive gamma atmosphere situation. And so that still is a easy place to just move and do the risk on, again, which is selling the VIX and then taking that money and you're going into the underlying within our indexes and ETFs and you're buying that volatility. And so that means that you're buying likely calls and you're paying the premium. That's also the volatility. And so that in and of itself, we get that much inflow to the calls and possibly selling the puts to buy the calls. It puts everything on the dealers in the options in terms of how they want to hedge. Because someone could be buying the calls and selling the puts, or selling the puts to finance the calls. And then maybe, and they're going to be selling of the underlying, if they're doing that much, and they'll be doing it in the indexes, but they're not. So back to the NASDAQ. I think that the NASDAQ also still has a little bit more to go, even though today we managed to get ourselves back above this high, so which was good. And this high is 20,254, almost 255. Did we get above it? We did. And the high today was 20,271. So that's a very positive step in getting up and putting this finishing move in. I do not think it's over just yet. And by the close, and let me take this down right away to the 15. The close actually doesn't, it doesn't necessarily show it here, but that was after. So we went from, yeah, well, it wasn't all that much. That's 345. That's why it's here. Here's the close. The close is staying right there. 20,195, 194 was the close in the NASDAQ at 4 o'clock. At 5 o'clock, the close was just below the high. The high was 20,245 in the close. So that was it was a very strong close. And so that to me is always suggested, well, we should see some follow through. And that would then fit in that I would be looking for that final move back up. Our next resistance is at 20,323, and that's for this wave 5. But I have to think this is 1, 2, and we're in the third. So it might just be the third, 4, and a 5. And we're looking at 20,398 to 20,440. So basically, let's just say 20,400 to 20,440 or 450 can bring it in. But we have additional, should they really just get into that mood, and it could, as we get closer to Friday's expiration and then Monday's expiration. I think we're into that crunch period where they're going to shift things around and decisions will have to be made on direction. So we'll see how it all frees up and how things shift around. Again, as I was saying, in the Qs and the spiders, I'm noticing that the range in terms of where the volatility trigger, the call wall, the put wall, and the other larger gamma positions is measured are getting closer and a little bit, in my view, out of sync. So I think they might change that volatility trigger, but they're leaving a lot of gamma at these other levels. And again, I'm assuming that it's positive. So we'll see. And how much of it comes off each day. And then again on Friday and then again on Monday. I think at the end of the quarter, and so I'm trying to say a lot will get released simply due to the expiration. And it's not the biggest that we've seen, but I think because it's quarterly, it's going to be exasperated. I don't think that's the correct word, but a lot of focus goes to the JPM. Where are they putting their markers? And it can create some additional trading around that. So I'm going to leave it that the market does still have upside potential. And here in the NASDAQ, it really, I think at a minimum, I would believe we should at least see 20,450-ish up in that area. And then the next time frame, or not time frame, the next price frame is 20,627. So I'm going to say 20,625 to 20,740, 750. I'll give it even that little bit more. They seem to go poking really hard because ultimately then we have up here, and that's towards 21,000. And at that level, 21,000, I believe we're now poking on this one. And that kind of could put in the NASDAQ, believe it or not, if I'm going to leave this as an ABC, and it could just keep it in a flat. We'd have to count the whole thing out as a 5 down to make it an A, and then we would not be looking for a flat. But because I labeled it ABC, could have been completed the whole 4, or it could still be just wave A and we'll get wave B, which does have the potential, but the probability, or it has the wave structure not limited. Wow, the wording. It has the potential that it could reach the flat structure. That's what I'm trying to say. And from there, still go all the way back down. If it does it up into these levels, well, then I'm going to be, I will take whatever the difference is here, and I'm going to take it off of there, and that's where I'm going to be expecting it to come back down. So depending on how high it gets, we'll see how much further below here the expectation would be. But it would remain. The other side of the coin suggests that these levels, no matter what, I believe will be finishing 5 up. So whether it's going to be here, here, or here, we're finishing the 5 up, and that could stay the same. So if we're in the other one where this is minor 4 and it's in and done, this is 1, this is 2, and we're in a third. And this actually, what we'd be finishing up in here somewhere would be, again, minute wave 1. Excuse me, minuet wave 1 of minute wave 3. So minuet wave 1 of minute wave 3. That would be in the opposite count. So even there, I'd still be looking for a pullback. So I think we're getting up into this area, we should have a pullback. And it will be the strength and the severity of that pullback, the depth, that will then know which of the two that we're running together it is. So we're always going to be, so let me tell you why I do it this way, because the other thing is, it's not if you're a long-term trader that now I can't plan. It's like that is up to you. But I'm not. I am a short-term trader. And so that's my focus. And I'm also looking at swing traders, or somebody that is actually trading options, and you can trade to a price. If you think that the index can get to that price via what the options are telling you, then yeah, you put on an options trade. You can trade your options. So that's my focus. And so, yes, I think that the market has the potential where it could get up to that level, but I think it pulls back. And it pulls back either in the start of a C wave, or it pulls back in an ABC, and it's just a wave 2. And then we go roaring up again. Or we finish it and we go down, and then we go roaring up. So both contain strong rallies as a result of however they end up. Whether it ends up here or whether it ends up here, I think a strong rally follows. Where it ends up here, I think it's still going to be a strong rally. So those all remain the same. And now I'm just working on where the levels could go and how it's going to be traded. So right now, I think that the NASDAQ has the potential to get to 20,440, like 20,400, I think we should just accept. And then 20,450 to top out there is a possibility. If it breaks it cleanly, then we're looking at 20,600. So we'll go flipping through, I think 20,500 will probably just come and go real quick, according to how this fib is lining up. There may be others that have fibs all in there. So we'll see. But those are my clusters. And then we get a pullback, and then we'll know from there. All right. Tomorrow on the calendar, on the economic calendar, is also a lot. We have initial jobless claims, durable goods orders, GDP, the second revision, and then, like I've said, pending home sales at 10 a.m. And then in between, starting at 9:10 all the way up to 1 o'clock Eastern, are just about all the Fed governors and presidents, plus the chair, Jerome Powell, will be speaking as well. And so I think that the market will be tuning into that as well. All right, so next up will be on Thursday, September the 26th.